STAAR Surgical. First up, read this disclaimer carefully. By the way, remember to like, subscribe, share, and comment. That helps the algos and makes everything much better. Okay. This company can be found in the Zeitgeist. Specifically, we have one called Fix Vision and Hearing, okay? The performance is decent on average, 67%, beating the overall stock market, but the difference between the performance here is substantial. And this is a good example of how I design these themes. I put companies in the theme that fit in the theme. Hence, I do not remove the losers and keep, the ones with the biggest numbers, because that would be cooking the books. Of course, within this theme, it makes most sense to be bullish those that are on an uptrend and be bearish those that are in a downtrend. Hence, your performance could be significantly better than this. STAAR Surgical, they make artificial lenses, 144% from the 52-week low. That is pretty decent, close to all-time highs. The reason why I'm very bullish on companies that fix vision and hearing issues is because there's massive incentives for companies to fix it. Because if people can't hear or see good, then they will not be able to participate in the workforce, and hence there's all these incentives for the governments and so on and so forth to support companies in different ways that solve these issues. Okay, so STAA is the ticker. Here is the seasonality. So July is literally the worst month here for STAA historically. Looking way further back, you can see that there's a general weakness around here. But let's look at the more relevant numbers, 2001 to 2020. You can see, however, that August is better. It's actually one of the stronger months. So that's how you potentially could play this. Let's look at the company's website. Okay, evolution in visual freedom. Over 1 million lenses implanted worldwide. 99.4% of patients would have ICL procedure again. Who is STAAR Surgical? STAAR designs, develops, manufactures, and markets implantable lenses for the eye with companion delivery systems. These lenses are intended to provide visual freedom for patients, lessening or eliminating their reliance on glasses or contact lenses. By the way, I actually use contact lenses. I am nearsighted. All of these lenses are foldable, which permits the surgeon to insert them through a small incision. Here are refractive solutions, cataract solutions. Invest in innovative technology. Very, very interesting company. Very interesting indeed. Okay, so let's look at the charts. So this is the entire picture we have here for STAAR Surgical. Weekly data points all the way back here to the IPO. So we've had this massive monster rounding bottom pattern here, and then it's broken out substantially. Huge move. If you measure from this low here to this high, okay, this is just like a shocking 7,130%. Okay, that's a rally. That is officially a rally. Okay. However, you could make a case that, given all of the history with this stock, this is how it usually behaves, up and down, up and down. It is behaving in this cycle patterns, up and down, up and down, up and down, up, so much that, I would want to make a bit of a bearish case here for some short selling. There is already some weakness happening. So this is definitely one of those to buy on the dip. I think that buying here is, kind of a bit risky, given that we've had a monster rally already. We were quite overbought here. It was practically begging to be shorted, and the long history here is that it does like to move in these rhythms, to breathe in and breathe out. Seems like it's going to breathe out a bit here. The accumulation distribution line shows that buyers were definitively stepping up. This was not on low volume. The correlation with the S&P 500 is 60% positive, so modest. Looking at the daily data points, you can see here that there is a bit of a clear downtrend, so it makes sense to go further down. We have closed below all of those moving averages. Based on the history, it makes sense to just have a bit of a pullback. It's healthy. It's what it always likes to do. Let's just compare it against the S&P 500 now. Okay, let's do it like this. So you can see here that, yes, it is very weak in July, like seriously weak. But there is a slight tendency to outperform in August. But not like super dramatic. It's like 58% of the time. It's not 50-50, but not like super reliable either. So here are some other numbers, okay? There are options available, that's good. It is a shortable, that's also good. Here are a bunch of metrics, so the price to sales, so these are red numbers, as you can see, the PE, 212, price to sales, 17, price book. Okay, so price book below 1 is what value investors really like. So it is really stretched. Really stretched. The performance is amazing, 61% year to date. Amazing. Let's look at the analyst price target, okay. So the analyst price target is $59.20. It currently is trading for $56.69. So the price target is like 4% above the current level, hence the price target. The analysts are not really going to do that much to boost it further. The analyst recommendation is currently 1.7, so the analysts are kind of like all in, more or less at this point. If we go here to Saks.com, 3 hold, F value, so there's no value whatsoever, forget about it. F growth, oh, really, horrid. C, F VGM, okay. Bear in mind that the Saks rank and the style scores reflect the price relative to all kinds of fundamental metrics. Meaning, if we do get some pullback here, then these Saks scores will improve because it will not be like ridiculously overvalued anymore. They categorize the stock as medical dental supplies? Okay, maybe they do some dental supplies and also eye care. Yeah, okay, yeah, well, I don't like the Saks industry rank at all. But yeah, it is what it is. Okay, so basically to sum up here my hot takes here on STAAR Surgical. Long term, to be perfectly clear, I am very bullish on STAAR Surgical. I mean, it is in a very interesting industry. They are solving a key problem that there's strong incentives for companies to solve. Massive support there. The performance from the major low way back in time was extreme. So yeah, I mean, there certainly are reasons to be bullish long term. It is just that at this point in time, there is very good reason to think that we will see a pullback, which opens up an opportunity for the bears. STAAR Surgical. So this is one of those, if you want to have a bullish position, you want to buy after a pullback. Okay. Let's look at some of the S&P 500 stocks. United Airlines. That's the next one on the list. It's also a part of the S&P 500. Okay. Here's the long-term picture. This is one that was hit hard by the contagion. It hasn't really seen that much improvement. You did see a major pop, but this is a great lesson in why you want to use stop levels. Because if you bought near the low and held on a bit, 145% gain in a very short time, but there was a change. Okay, so let's measure. Okay, from this low to this ultimate high is 168%, but to our current level that's 80%. This is a great example of why you want to use stop levels to protect your gains, because that's a very big difference. If you are a contrarian, I do see how one could be tempted to maybe buy, some speculative long position. The problem with the airlines is that we know for sure that the airline industry is a part of defense. Hence, there will actually be limits to how many bankruptcy will be accepted in this space. It is strategically valuable to have airline companies, not simply for defense, but also for emergency services, all kinds of stuff, really. Commerce, you name it. It is something that all countries want to have the airlines. They will not be allowed to just go out of business completely. The challenge is that a very large part of the airline business is very discretionary. It's people traveling to entertain themselves, to relax, but these are travels that you do not really have to take. Hence, it is a bit difficult to know how much of the long-term picture is currently priced into these companies. That's the major issue I have. There are many uncertainties here. So it could make sense to maybe wait and see how the market reacts, even at these low levels, because the contagion was a real game changer, and the issue is that it didn't go away with the increased temperature. So we do have a bit of a very tricky situation in which we have the influenza virus, which is especially hard during the cold season. But then you have this C virus, which doesn't seem to be much affected by the heat, and it probably has gone endemic. I mean, it almost is guaranteed at this point to have gone endemic. So the difference between a pandemic and an endemic, okay. A pandemic is when some virus spreads far and wide and is basically out of control. It has reached critical mass, built up momentum. However, it can go away at the pandemic stage. The problem is that there's a very short distance between a pandemic to an endemic. An endemic virus is a virus that has become so ingrained in the world's ecosystem that it will be around as basically like a new species for the foreseeable future. So that's how the influenza virus started. It started just with some people getting sick, but then it just stayed with us, and it's been with us for 6,000 plus years. The combination of influenza with the C virus will be a massive drag to the world economy. It can be solved, thankfully, through genetic engineering, but it is certainly making the case for genetic engineering. Okay, now let's look at AMD. Okay, here we have a monster rounding bottom, extreme breakout. But we are seeing some fatigue here. Okay, AMD reached a very high level, massive gains. I'm not saying this is a screaming shot at this point, but if you look at history, there have been some very major pullbacks in the past. Like even this pullback right here, from this high to this low, right there, that's okay. It's right there. That's minus 76%. If you look at this pullback here, from this high here to this low, minus 50%. So when there is a shorting opportunity for AMD, it's pretty profound. And there is some sign here of fatigue. Okay, whatever you do, don't fight the trend, and may the trend be with you.